Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about swing trading. This is going to be a crash course for people that are just getting started with swing trading and you don't know where to go, you don't know what to do, you don't know the timeline on how to become a trader. So I'm excited, and we're also going to be talking about some stocks that we're holding, stocks that we're already up about $700 on, which is awesome. So I'm excited, guys. So hit that like button, subscribe, and don't forget, if you want to learn more about swing trading and take your knowledge to the next step to become a trader, check out our school. It's awesome. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get rich quick, it's not alerts or anything like that. We teach you how to find stock. We teach you strategies, approaches. So check it out down below. Don't forget code YouTube to get 20% off. So click that link, sign up, and guys, let's jump into this. So before we talk about the strategy that I would recommend sticking to, I want to talk about here today is having realistic expectations. A lot of people think that trading is one, easy, two, it's an easy way to get rich quick, and three, anybody can do it. And I hate to say it, but all of those statements are completely false. You know, swing trading, it's a job, it's a career. And actually 85% of traders that go into the market will fail. So the approach that I've always had with trading is to treat it like a job. Think of it as like a doctor, a lawyer, an engineer. So, and what I mean by that is those people take years of practice, of hard work, of education in order to get where they're at. With trading, you have to have the exact same approach. If you're going into this with little education, yes, you may get lucky a couple of times, and maybe for a couple of months, you may get lucky with some trades, but I can almost promise you that you're going to burn through this account. It's a recipe for disaster. So if you're watching this video and this is the first swing trading video you're watching, take a step back and focus on learning and focus on paper trading. So I just want to be upfront about that. And let's jump into some stocks that we're holding in our thought process behind them here. So the broker that we are using here today is Moomoo. They're awesome. They have great charting, great scanning, but more importantly, they offer a lot of great tools like an AI monitor. They offer paper trading. So if you're just getting started with trading, I would highly recommend them. They're awesome. You guys can get 20 free stocks by signing up with them down below. But more importantly, I think they're a very easy to use platform, and they have a lot of great indicators to help you get a gauge of where the stock can go. So the stock here that we are holding, we're actually holding 3 positions as of right now. And the stock that we are in on is ticker symbol KFY. So looking at this stock here, what do we notice? We notice that the stock has a bunch of buying pressure on this blue line, right? It hits it once, twice, 3 times, 4 times, 5 times, 6 times. So, this blue line is what we call an indicator. So this helps you get a general gauge of where the stock can go and the trend of the stock. So you can look at it and instantly know the direction of the stock, right? It has an upward trend and the support levels. So the 90 moving average line is the blue one. The red is the 200-day moving average line. The main difference between the two is going to be support strength. So the 90 is going to be a harder support than the 200 is going to be a harder support than the 90. When the stock does sell off down below it, it does act as resistance. So when the stock is above it, it acts as support, and you can get good buying pressure there. So now you're wondering and you're saying, okay, all right, so it has, support on the 90. It has an upward trend. What other things do you look for? So for me, I also look at trend lines. So a trend line here, you guys can see, is a single line of where the stock has gotten great tendencies of getting support here. So looking at this, what do we notice? We notice great buying pressure at this line. So buying pressure, buying pressure, buying pressure, buying pressure. So now we also have 2 support lines. We have a trend line. We also have a moving average line. So now you go, okay, so you have a lot of support strength. You have a lot of great, indicators in your favor. We also want to look at here the RSI. The RSI is this green line down on the bottom here. It kind of looks like a snake. So the RSI tracks momentum. It's called the relative strength index. Historically, with most stocks, anything over a 70 is an overvalued point for the stock, and that could be where you want to sell it. That could be where you want to short it. Now, when a stock is historically under like a 30 or a 35, this could be an undervalued point to buy the stock. So this is where you could possibly want to buy it or cover profit if you are shorting the play. So now here, looking at it, we have a lot of things in this position here. So let's go ahead and show you a little checklist here, because I do think it's important. So let's go ahead and pull up this. All right. So before I ever place a trade here, I want to look at this. So this is kind of my trading checklist. So the first thing is a stock on an upward trend. We want some sort of support here on the daily chart. Now, obviously, the more supports you have, the better off you're going to be. You want an undervalued RSI, preferably under a 30 or a 35. We want to know the earnings date. Holding a stock through an earnings report is incredibly risky. It's like a 50-50 chance of making money. And for me, I will hold a stock through an earnings, but more often than not, I don't. But yeah. The next one here is a good risk and reward. So we'll show you how to do that here after, and then we want some sort of 1 hour support. So, this trading checklist is very important, because what a trading checklist does is it helps you pick stocks that meet your strategy, and you're not just picking any old random stock, you're following an approach. And I think that's very, very important here. So going back to the stock here, what I do is I go to the hourly time frame, right? You can see here where this stock, let's get these moving average lines back up, sold off down below these moving average lines, right? And you guys can see it formed this nice trend line. So now the thought process I had with this is to enter on this trend line, keep our stop just below it. So entering, at like that 71 range, keep our stop just below it for push back up. I do think as well, we could see a little bit of some resistance up here because of this general trend line. But more importantly, we could see some sort of resistant breakout out of this. So now looking at it, we could either take profit here or even thin out some shares up here just for guaranteed profit and hold for a possible breakout. That's a very, very good approach. And, you guys can see the hourly support here on this. So going back and looking at this here, right, entering here at like around that 70 mark, keeping our stops just below it for a push back up, would ensure a nice risk and reward of about 4-1, which is really, really good there. All right. Let's talk about another stock here we're in on is Costco. So Costco here is very, very similar, right? Looking at the chart, what do we notice? Upward trend, heavy support on the trend line and the 90-day moving average line. It was a little undervalued on the RSI. So more importantly here, look at this. You can see here this hourly chart of pretty much why we got in on this position. You guys will see it had that trend line and it broke out going up. So now we got in on that breakout going up. So now we're holding like this. So as the stock goes up, we'll keep our stop loss just below it. So we can ensure that we're going to catch this stock when it rides up even higher. The thought process, the approach is very, very similar. And I'm a lot more confident with blue chip stocks like Costco, Apple, all these stocks you and I probably know and use quite often. I feel a lot more confident with them because there's a lot more hedge funds, a lot more volume to ensure a push going in the right direction. But this is a very, very simple approach that you guys can use to start making money from the stock market. So I hope you guys all enjoyed it. If you did, hit that like button, subscribe, and we will see you guys in the next one. Don't forget code YouTube, 20% off for the course. Check it out, and I'll see you guys in there. But take care.